Kazi, thank you. To buy or not to buy? That is the question for anyone looking to enter the housing market. Hardly a day goes by that property prices and interest rates aren't dominating the headlines.
Now, one of the big four banks, NAB, has revised its forecast for the market. And with a rate hike expected midway through this year, they predict house prices will drop by up to 11% in 2023. So to break it all down for us, we welcome back financial advisor and founder of Pivot Wealth, Ben Nash. Hi, Ben. For would-be home buyers, hearing of an 11% price drop, that must be music to their ears. But if you have a deposit ready to go, should you be waiting until 2023, waiting for the price to come back, or buying now?
Well, look, I think timing the market is very difficult in any circumstance. So while there are, and we were just chatting a little bit off air, that there's some aggregate data and we look at the averages across different areas and regions that are set to potentially decline, that it depends on the pocket that you're buying, what you're looking for, what sort of property. So, and they'll all be moving at different rates. So that 11% figure is across the whole year, across the whole country. And I think that we're seeing at the moment, the Sydney and Melbourne market has slowed. We're seeing still growth in Brisbane, Queensland, Tasmania, across Adelaide. So when it happens, again, it sort of goes back to your strategy. And yeah, I think it's almost impossible, even for the experts, to get it right. So I think for the average Aussie, quite difficult. But even though there are some declines, and of course that's concerning, we've got a lot of property owners in Australia, that we have still seen big rises. And I think if you're buying for the long term, there's still some good money to be made, but it all goes back to having a solid plan and making sure your purchase fits with it.
Just so we're clear, those off-air chats, very much private questions here. Let's talk interest rates now. Economists are predicting a bit of a rise second half of the year, possibly. What's the forecast, and are there any more specifics around this?
Yeah, look, I think it's important for people to be aware that the RBA definitely, they do not want to increase interest rates. Coming out the back of COVID, both the RBA and the government, they want the economy to perform as well as possible. But what we're seeing is we've got very low unemployment, we're seeing strong employment growth, and we're also seeing inflation, and the cost of living is increasing, and increasing at a rate above where the RBA would want it to be. So I think that the RBA will try to hold off as much as they can. But it's inevitable that a rate rise is coming at some point. Although I think it's worth noting that if the last couple of years have taught us anything, is really that things can change really quickly with the COVID situation and the impact on the economy. So it is possible that some natural factors or headwinds might slow down some of those key stats, and then mean that the RBA isn't forced to increase interest rates as quickly as some people are saying.
Are we in for some stormy times ahead? Because homeowners kept seeing those prices rise. They rushed in, they got big mortgages to try and get a foot in the market. So for them, the prospect of any sort of rate rise must be very scary, because they've bought at the top of the market. Yeah,
absolutely. Yeah, we're seeing average mortgage levels are higher than they've ever been, and more people are under the definition of mortgage stress. So increases in interest rates obviously add to that pressure. So yeah, I think people are right to be a little bit concerned. It's probably a good reminder to think about the potential for fixing rates. And when I say that, sometimes people think about fixing their rates and they're trying to beat the banks or make more money. And that is a really challenging thing, because the banks have whole teams of people and economists and analysts that are making sure that when they do fix rates, that they're making the same amount of margin that they're going to get from a variable rate over time.
Yeah, the banks don't want to be disadvantaged.
Exactly right. And trying to beat them, or like you versus them and their teams behind them, is challenging. And you might get lucky, but most of the time you probably won't. But fixing your rates does give you a lot of certainty. So you can, sometimes it means that you might be paying a small price, but that certainty can be quite valuable. And especially if you don't have lots of spare cash flow, or if you think that interest rate rises will have a really serious negative impact on your financial position or ability to save or ability to pay down your mortgage, then thinking about potentially doing that, taking some risk off the table and fitting in your mortgage with what else you're doing with your money can be worthwhile.
A known factor.
Yeah. Now, the pandemic saw a lot of households sort of squirrel some money away. What will a rate hike mean for families and retirees who have savings in the bank right now?
Well, definitely you're going to get more interest on the cash savings that you've got in your bank account, but it's worth being aware that when interest rates increase, it often has a negative effect on